is Alan. I'm targeting the problem statement number 3, where MSMEs find it difficult to get loans and even the bank finds it difficult to see how whether they're eligible or not. So this is a completely ML-based model which I've trained to detect whether a company is worthy of getting a loan or not. The accuracy of this is based on 4 things. First, the ML model is based on XGBoost. It has a 90% accuracy based on the parameters we have set, which I'll explain more in detail later. And altogether, on a whole, this one has at least an 80% accuracy to check whether what we're doing is right or not. We calculate the loan on 7 different dimensions, which I will speak about more in the next part of the video. So why should we use my project and not the others? This is based on what I've done today. So if we use my project, you get 6% more approvals. Also, people who don't have track records or are new to the system also are covered into this. Also, the risk appetite of the bank right now I've calculated at 19%, which obviously is a baseline I've calculated for now, which can change later anytime. So what happens in this model is that we take the same risk, but we get more inclusion based on what picture we get from the model. Same volume, but we get better quality outputs if we use the system. So if you just use a bureau only baseline, which is like a normal way of doing it, the percentage is 19.2, whereas the same model you get probably a lesser degree, but the quality is much higher. Same thing is that when we talking about risk, the 1000 are approved, 19.2, the same risk, more are approved, calculating the same risk over here, which is over here. How the score of a particular company is built. We go through 5 steps. I'll go through it quickly. We input all the data, GST, UPI, the bank statements. With that, I use my internal calculation and develop 14 ratios, trends, and group them into 7 dimensions. The 7 dimensions over here. This is the cash flow health, the repayment capacity, stability and vintage, compliance, leverage, and growth momentum, and operational footprint, which is the power consumption. This all I get from the data, raw data that we get from all the things I mentioned before. Then the weight of evidence binning, that is, each feature is trained on the ML model which I have in the background, and points are awarded based on how much weightage are given to all the 7 dimensions, which is obviously controlled by the bank. After the points have been given, we get a score, which is we get from this formula out here, and we give it a score from between 0 to 100 for each dimension, and based on that, we get the final score out of 700. Next, I will be explaining the financial health card, which I have completely used synthetic information to show the data. So we have 4 types of retailers or businesses here: the thriving retailer, the seasonal trader, the stress manufacturer, and a person who is completely new to the ecosystem. So based on the input data, and which I explained in the previous part of the video, the score is calculated based on how good they are doing. So there's cash flow as the same 7 steps, which I will not repeat. A score is given to them. Okay, and as you can see, the stress manufacturers retailers are pretty bad, and this is directly an advice given to decline, which is ultimately dependent on the underwriter if he wants to proceed or not. This is a what-if simulator that helps the bank to kind of gauge based on if the GST delay is less. Okay, so the score improves if they're filing regularly. Okay, the score improves even better. So this is a what-if scenario that gives the bank an idea about how the credit score actually works. And then we have the model which I was talking about, the ML model. The weightage can be shifted and retrained by the bank itself. So suppose they want to give more importance to GST filing and less importance to cash flow and consistent GST filing, they can clearly change the weight of the models. And this is what I told you before about the 4 different types of retailer companies out there. And once you get the scorecard, you can directly export the CSV or the JSON file in order to show it to others and kind of get others' opinions out of it. And last but not the least, I would like to show about the compliance and fairness, which are built into the guidelines to adhere to the RBI digital lending guidelines, where we don't want to discriminate on gender, caste, religion, or any age or location. So all the things are noted down here. This is just a way to show how we keep track of the data. And finally, this will be like the sign-on screen for whoever wants to take the loan. Here, consent will be asked from them. We'll check what type of data, which type of bank are they using for the data, and then it will automatically fetch and generate the health card. So this is it for the project. I hope you understood everything how it goes through. If you want to understand how the entire system works at a glance, you can just go to the how it works page, and it will explain. You can be seeing everything in detail out here. Thank you.